morning, traders. I'm Dennis Dick.
And I'm Joel L. Connon. Welcome to Pre-Market Info.
Well, on today's show, it's Option Expiration Friday. This often creates significant volatility at the open and the close. It can affect the NYSE imbalances, the closing and the opening imbalances. So we're going to discuss how these option expiration can affect the opening and closing imbalances. We're going to look at earnings from the Gap, Aeropostale, Foot Locker, and MRVL. Also, Molycorp under pressure again. And some key levels we're going to focus on: Chevron, ExxonMobil, Apple approaching a new 52-week high, and General Electric not too far off its 52-week high either.
Well, we finally took out that 14, 13 and a quarter. That March high had just been staring us at the face. We got over it yesterday. Couldn't quite close above there. Closed very, very close. But lo and behold, we're right back up there.
Yeah, we're finally starting to get out of this trading range. We have been in this tight little narrow trading range for the better part of 2.5 weeks. The volatility obviously has been muted since we had that big gap up day back on the 3rd, and we've just slowly been climbing up this wall of worry. But yesterday we kind of broke out, made a new 52-week high. Can we continue the move here today on this big option expiration?
Yeah, 14, 15, 50. That was yesterday's high, the high of the move. We bumped up against that during the Globex session. So that's the only number we have on the upside. And as long as we stay above 1410 here, I think we're good to go north.
Just a little market structure talk here for you. Option expiration Friday. So basically you have your options expiring third Friday of the month. And this can sometimes affect the opening and closing NYSE imbalances as you get big institutional players who are offsetting their option orders or closing out positions. And what happens is you have a lot of institutional players that are putting orders at the opening and at the close. So on these days, you'll often have, and what these NYSE imbalances just basically are, is just the excess order flow, the excess buy order flow or the excess sell order flow. So for instance, if the designated market maker on the NYSE floor has a whole bunch of buy orders coming in above the close and more than the offsetting sell orders, then they will post a buy imbalance. If they have more sell orders than they do buy orders, they will post a sell imbalance. These imbalances actually start posting at 8:30 in the morning, so 1 hour before the market opens, and they continuously adjust until the market actually opens. This is key information, though, especially on these option expiration days, because even at 8:30, it gives you a little glimpse on whether we have a lot of buyers or a lot of sellers. But then also these numbers are manipulated too.
So what are you seeing so far this morning?
Well, there's none yet because we're not quite to the 8:30, but typically on these option expiration for the last 3 or 4 months, this is only like I'm talking about on the third Friday, we've been seeing more buy imbalances and sell imbalances. And since we've been drifting up here, it wouldn't surprise me if for whatever reason the institutions have to buy some stock off the open if the market opens up a little bit high or a little bit too low. But it's all just a trading opportunity for you short-term traders out there, because there is a little bit more liquidity on these days and there's a little bit more volatility. So sometimes stocks can open out from their fair value.
And just real quickly, since there's not strike prices on every stock, I mean, if you've been short those Apple 640 calls for a long time and, you're still looking okay, 635 calls are obviously in the money. A number like IBM, the 201 level is a big level. So the institutions, depending on what their position, will try and push the stock, right around those even numbers. So
Yeah,
that's
a
a good
great
thing
point.
to keep an eye on.
That's a great point. You get those options that are just slightly out of the money. The institutions will try to push them even at the close to get them in the money, or if they're written on them, to try to push them out of the money. But basically, the big boys try to push the stocks around a lot on these days. So don't get caught, in a move, because some of the moves can sometimes be sustained even at the close. So basically, your opening and your closing on days like this can really be affected by these big institutional buyers or sellers that are moving the price around just for their option positions. That's over our overall market structure talk here for this morning for you, though. So that's the option expiration. Let's move on to the earnings, though. We've got the Gap reported earnings last night. GPS is trading up pretty good in the pre-market, 35.01. I think it was higher than that before. Joel will go hunt down that after-hours high for you. Just looking at the charts here, we've had multiple highs right around this 35, just below it, 30.49, 30.49, 34.92. So we've had multiple highs. Are we going to open over this critical $35 area this morning?
Boy, I don't know. It's already up 67 cents in the pre-market. We did hit 35.50, which is a nice bounce, so we're still 50 cents away from that. 34.50 has been the low in since we made that 35.50 high. I would just keep an eye on this $35 level. We dipped under it a few times here in the pre-market, but just seem to be holding above that. I imagine you're going to see some major resistance at that 35.5 if we get back up there. That coincides with a level that we had we haven't seen since May of 2001. Is
Oh, I
when
can't
this
even go
stock.
that far back. I'm actually
Yeah,
going back
gotta
to
go to the monthlies on that one.
2001.
But just a note out to Best Buy here. Gap stores, a couple of our stores in the area over the last few years, they closed, but they also downsized. They had one major store in this area, and they downsized it. They got a much smaller store, less overhead. They got better products. That's what you need to do to survive in this brick and mortar market.
You're still giving Best Buy some heat. Best Buy had a decent day yesterday, though, getting up and starting to move up here again. Schultz obviously still sniffing around and trying to get the financing to that 24 to 26. We'll have to see what happens and materializes with that. Aeropostale reported here too, though, and this stock has just had a terrible time over the course of the last month and a half. It's trading down again here this morning, $12.64 after closing at $13.66. So it's down another buck. It's on the earnings guidance. They were estimated to make 38 cents. They're only going to make 25 to 30 for the next quarter. That is why the stock is getting beat up here this morning.
Yeah, it hit 1240 right when the news came out. And you have one of these pre-market hovering patterns where it spiked down, it hit the 1240, and now it's just trying to catch its breath here. Keep an eye on that 1240 level. Going to the charts, when the bad news came out at the beginning of the month, it hit 1265. So let's call that whole 1250 area major support. Coming back on the upside, you're going to have good resistance at 13. Aeropostale, though, I mean, this stock is, I don't know. I go by these stores, and I can't imagine one person buying one thing.
Well, it doesn't appear that too many people are buying clothes at Aeropostale. Maybe they're all buying shoes, though, because Foot Locker here is taking off in the pre-market. They beat handily there last night, 39, actually this morning, 39 cents against estimates of 33 cents. The stock is trading up over $2 right now, making a new 52-week high, 36.50, closed at 34.49. What a move for Foot Locker.
Are you ready for one from the archives
Well,
here?
how far are you going back?
1992.
Is this a 20-year high for the stock?
Yeah, yep.
20-year high. So it's not an all-time high, just a 20-year high. Joel really had to go back on those numbers.
The good old actually, yeah, that's as far as they go back.
I
Now,
can't
it
even
isn't.
bring that up on the chart. So you're going.
Yep. Actually, it did hit the $35 mark back in 1992 when my first daughter was born. Had a little bit of sell off though, but it's come back. Looking what's happening here in the pre-market. Holy mackerel! This thing really got out of control, Dennis.
How far?
It traded to 37.49.
Come on.
Yeah.
These news bots are just insane. And that's what it is. You get this news bots that are just reading the headline and they buy everything up in the book and they buy and sometimes they're right. Like sometimes they get a lot of stock flat, so they could have still made money on it, but they seem to buy way too high and way too low a lot of times. They seem to sell on the bad news. So here it is, good news. The news algo, I'm sure it's a news algo. We're not going to go look at the tape, but you just know these news algos come in, so I'm sure it's the same type of deal.
Yeah. Also, just looking at yesterday's range in that stock, 34.80 was yesterday's high. So we'll keep an eye on that as major support.
Gotta think this stock's going to, open. It's on quite a bit of volume here now, 39,000. So I think this thing probably is going to open high. But you never know. People come and fade these moves. Maybe somebody that bought in 1992 is licking their chops after holding the stock for 20 years. They can finally get out flat. Molly Corp, a mess of a stock. This is unbelievable. In the last 4 months, it went from 35 bucks to 11. Now it's at 10, 10.25. Yesterday they announced the secondary beat the stock up a little bit. Today Moody's is downgrading, or actually last night Moody's is downgrading their debt. There's downgrades. This stock is just a mess.
Why would you offer? Why would you do a
They need
secondary?
money. Need money.
Oh
Gotta
my
raise money.
God.
They're in trouble,
Uh,
man. And you can see the chart. When you have a chart that looks like this, 35 to 11, people will pick bottoms. They'll say, oh, when it got down to 20, they'll pick bottoms. It starts making new lows. You got to get out. Because here you are. If you were picking that $20 bottom back in, 19 and a half, back in May, it bounced around there. You got up a little bit. As soon as it started to consolidate, come back down in July and starts to break down from there, once it starts to make new lows, that is your cue. When the stocks start to make new 52-week lows, you got to get out because it can get ugly in a hurry. Here, if you bought this stock thinking you had support at 19 and a half back in mid-July, you've now lost 45% of your money. The stock's down at 10.34 and it's still making new lows. You just cannot be in long stocks when they're making new lows.
I mean, you could be in them, just have a reference point for an
Yeah, well,
exit.
that's it. You've got to have an out. You've got to have an out. You can put on any trade in this whole entire universe of stocks. You can put on any trade as long as you have an out. Know your reference point. Know where you're getting out. But where is your out? If this stock's making new lows, you're just picking bottoms here right now. This thing could go on and start going under 10, and you could be under heat. It doesn't have to bounce back. Like if you look back even to the beginning of August there, when we had the big gap down from 15.95 all the way down and closed down there at 11.31. You never had really another out. They never filled that gap. So if you're thinking, oh, it's going to come back to 15 or 16, I'll get my money back, you never had a chance. Now it's down to 10 or 11, you're taking more heat. You've just got to cut your losers. It's the whole key to trading. That's how you stay in the game, is knowing when to cut your losers.
Yeah, 10.11 is what it's hit in the pre-market, getting a little bounce off that level. So keep an eye on $10. This thing is traded 800,000 shares. So that's people
They're
are
serious.
making, yeah, that there's some serious volume in this.
Marvel, MRVL, reported earnings as well. Stock reported 24 cents against estimates of 27, so they missed. It's down 9%, trading at 11.17 after closing 12.28. Here's another one, been falling off. It's got a pretty good run in the last month, but it's given some back now. The overall trend is still not your friend here. This little mini trend that we had going up is probably broken here now, so it's hard to argue. I would say this trend is probably broken because we're opening down this 11.15 area. So I think you got to be a seller of rallies on this one.
Yeah, 11.05 is what we've hit in the pre-market, getting a slight bounce off that level. That coincides with a low that you had back on August 6th at 11.09. After the steep drop after the close yesterday, you if with a little bit of a stretch of an imagination here, you do have a rounding bottom from the pre-market formation. So if you're going to play this from the long side, I think you have to cut it loose under $11.
Let's talk about some of the Big Ten because we have this big option expiration which can push stocks up to resistance and support levels. This Chevron CVX 114 has been huge. We know there's some institutional selling pressure up there. It got up to 113.87 back on the 14th. It got as high as 113.64 a couple days before that. It's bouncing back up. It's at 113.32. No volume here today, but if for whatever reason the stock starts to opens up at that 114 here, I would say that whole 113.87 high up to 114 is littered with high frequency resistance, and it could be a decent opportunity for a short off the open if it opens up just below that 114. Now I don't know if that's going to happen. It all depends on how these imbalances look, but it's all about being ready, when you have an opportunity, and we just want to highlight that critical resistance area for you.
Yeah, this stock is surprising me a little bit. The last few times it made a new all-time high, it stumbled pretty good. But now I also go an ex-dividend this week too. So if
Yep,
you had this puppy, you got paid a nice
90
dividend.
cents.
Yeah, rallying back up to 114 as resistance. Instead of trying to pick a top like I always try and do, I just keep an eye on this 112 level to put a sell stop in there. If it breaks below there, there's some real estate down to the low 111s. But boy, this thing has just been
It's a
marching.
nice trend. Even if you look at this trend here overall, I can draw it for you there on the chart. But I didn't draw it that good. But you get the idea. This has been marching here. Trend is usually your friend, and if you're long the stock, it's definitely been your friend. ExxonMobil, big numbers, 89 bucks. We haven't been there yet. We're approaching, and we're right up there at the 52-week high there, 88.67. It got up to 88.87 yesterday. There's been some institutional selling pressure at these whole numbers. When these things are making new highs, they run into institutional sellers with their good tell canceled orders at the whole numbers. The high frequency guys, they sit in front of those whole numbers and they sell and they lean on those whole numbers. So you can imagine there'll be high frequency resistance all the way up from 88.87, which is your 52-week high, up to that $89 area where there's some institutional size.
Yeah, I mean it's like you're looking at the same chart here with the Chevron and the Exxon Mobil, just tight ranges, new highs. I mean you can't obviously over the last couple days shortening's been the wrong thing. The level I would keep an eye on if you're looking to exit this stock on weakness, you basically have a triple bottom here: Tuesday, Wednesday, and Thursday's lows, all
Oh yeah.
between 87.90 and 87.96, with Wednesday's closed right there. So you have an excellent support level. If you're not, trying to pick a top on it and you want to exit on weakness, keep a close eye on the 87.90 level.
What about Apple here? Is that thing going to make a new 52-week high? It did a run there again yesterday. It's 638.30 this morning. It's only $6 away from that 52-week high of 644 that we set back in April. Is that thing going to see it?
Well, I mean, there's nothing in the book there. I mean, the last time it went up to that area, it just kind of floated up there. It was
Yeah.
after a huge run. And now this is a little bit more of an orderly rally. There are sellers in there. It's just unbelievable that they came out, they had the big earnings miss, and all the Apple lovers were up there scooping it up, and now it's
You're right.
basically 70 points higher. The only reference point here you have is the 644 level. 638.61 was Tuesday's high. You got some major resistance there. But the boys that are short the 640 calls right now are sweating a little bit.
They're going to try to hold it down, are they? General Electric, here's another one that's just bumped up against its 52-week high. For the last 4 or 5 days, it just keeps kind of bumping up there. Got to 21.14 yesterday. I'll tell you, this 21.20, huge institutional size up there. That's why you've seen this double top up on the 6th and the 7th at 21.18 and 21.19. That whole 21.20 area is real critical. If it starts to take that out, it could continue to march. But it's still, I think you can still play this from the short side as long as this doesn't start making new 52-week highs and takes out that 21.20.
Yeah, GE has its history of making a move and then digesting it for one, two, three,
It
four,
really
five,
does.
6, 7, 8 days. It's in the digestive mode here. 21.18 has been the recent high. Probably better off trying to pick up this stock if you're playing it from the long side on weakness a little bit. Maybe use 21 as a swing number. Double bottom at 2079 and 2082 from the last 2 days. So if you're not trying to sell it on the way up and you're looking to sell it on the way down, keep an eye on that 2080 level.
Well, overall market thoughts here on this option expiration. Are we going to continue the run and continue to make new highs here?
What what is going to derail us? We haven't had any Europe talk in a while. Draghi
Yeah.
hasn't said much. I mean, why even though, and I wrote about this a couple weeks ago, you can get it overbought conditions, but the market
It's
doesn't know that
can
it's
stay
overbought.
overbought for a while, and it's just
Yep.
climbing this wall of worry. People continue to say, "Oh, well, the Europe troubles are going to come back. Oh, there's market structure problems, different worries." I mean, the market just continues to ignore all that and continues to climb here. And here we are. We're right up there at those levels that we had talked about. That whole night 14. 13, 25. We've been talking about that's been going and migrating here. Here we are right at the highs, and maybe we continue to go out. We've really consolidated nicely here for 6 or 7 sessions, so there's some support down the 1400 to really drive this move higher.
Yeah, I mean, if you really got an itchy finger to try a short, and you're looking for a number up at these levels, 1410 would be a swing level. We've held that in the pre-market, but it just looks like we want to go back up again. But the market will tell us at the end of the day. That's our show for today, folks, and we'll be back with you on Monday.